All right, so we're going to talk about how the SVB downfall, the Silicon Valley Bank downfall, was actually caused by marketing in a sense. And so most of you might say, oh, we know this already, it's PR. But the reality is it actually goes a little deeper. If those of you that are watching on YouTube, you should subscribe to us on YouTube, but I'm actually going to share my screen over here. So let's go ahead and share my screen, and let's move over to this one over here. Okay, great. So those of you that can see my screen, Neil can also see my screen as well right now. But this guy, Evan Armstrong, tweets saying that this entire debacle was potentially caused by Brynn Hobart's newsletter. Here's how the butterfly effect happened. Number one, Brynn posts this article/tweet calling out SVB's risk. Number two, pretty much every VC I know reads this newsletter. Number three, they all start to pay very close attention to SVB's earnings. Number four, absolutely earnings missed by SVB. Peter Thiel, USV, and Co2, these are all big VC funds, are first to send out messages, mass emails to portfolio codes to pull out funds. I think one of them is also PE too. Number six, tech Twitter catches word of this. Then you have the bank run. Then you have a collapse. And number nine, which is where we're at right now as of this recording, if FDIC and Buyer doesn't come in the next 7 days, potential 20% plus collapse of entire startup industry, all started by one overly prolific dude in Austin. Amazing. And so here's a couple other things. I don't know if you know this. I think it was mentioned somewhere that they're leveraged 185 to 1. And oh, here it is. So still bank is leveraged still 185 to 1 on assets, including, among other things, premium wine back loans in the amount almost equal to last quarter's marked to market equity. That's so the PR piece is one thing we'll talk about, but we want to talk about this first. So go ahead, Neil.
First, I'm not a financial guy.
Neither of us are.
I doubt that they were actually leveraged 185 to 1 on all their assets. I really doubt that. That just seems way too aggressive. That's like gambling. If you look at before this bank run, they actually had more assets from what they're claiming than liabilities. So again, I doubt they're actually leveraged 185 to 1 on all their money, because some was sitting in cash and other types of investments, treasuries, etc. So the 185 to 1 just seems a little bit aggressive. But yeah, like a lot of this is marketing. If you think about it, if you end up releasing a statement saying, hey, we're taking loss on our treasuries of a few $billion or bonds or whatever it is, and we're going to end up raising some money, it can end up sticking some panic in people. It all comes down to how you instill trust and credibility and make sure people believe in and trust you. And I really think it was a lot of the communication that really screwed this up. I know the title of this is How Marketing Caused a Downfall. I honestly don't think it was marketing. I think marketing caused a lot of the bank run, but in all reality, it's banking regulations and how they're investing their money that really caused most of this downfall. Seeking Alpha ended up writing a piece on SVB months ago on how they may be in trouble, and it ended up happening, right? But no matter how your business operates, whether it's good or bad, as in if you're having a great quarter or a bad quarter, a lot of how the market reacts to is based on your communication. If your marketing isn't clear, concise, if you're not fully transparent, I think things can really end up hurting you. I'm not saying SVB wasn't fully transparent. It was just more so that a lot of the communications didn't instill trust and, reassurance that everything's okay. It made people even panic even more.
Yep. So here's what I'll say. It's when you log into your bank account and you expect there to be a savings account or money being put into a safe like money market fund or whatever it is. The problem right now is that banks can actually take that money and they can go gamble it, right? Meaning that they can go invest in whatever they want. In this case, I believe they mostly invest into mortgage-backed securities. So I looked into it a little more. So we're not going to go into the details here, but point being is that it's actually unsafe. Like you want to know that your money is safe in a bank account. Like I was reading this is obviously news that's blowing up right now. There was a woman, she co-founded a startup. She has 15 employees. She also has 4 kids. So during the pandemic, she powered through it, managed to raise money during tough times in 2022 as a female founder, raised over $3 million. And it's by and large like a success story that she was able to persist. And by no fault of her own, all of a sudden she has to deal with her personal money is in SVB and also the business money is in SVB. And so everything's being locked out. And so Who knows what's going to happen tomorrow? Tomorrow's Monday. That's when markets open again. But what we're saying here is that at the end of the day, communication is about instilling confidence. And when you don't instill, let's say you're running a company, you don't instill confidence there, you don't communicate well, then you leave room for interpretation. And the room for interpretation was so wide here that it caused this bank run. And I don't care how strong you are, whether they were levered 185 to 1 or whether they were pristine. When a bank run happens, you're in trouble, right? And we hope that, I think our bet is still that the government's going to have to step in and bail things out. We don't necessarily think a bailout is good, but we think a bailout's the best course of action given what will happen. And let's rephrase
it. Eric and I are not saying that we think the government's going to bail out the company. We're talking about the people who hold deposits.
Correct, to make them whole.
Yes, neither Eric or I think that the government is going to bail out Silicon Valley Bank and the executives.
No, they should go to zero.
Compensation. Yeah. But the other thing that for you guys all to think about is it takes years, if not century plus, to really build a brand. It can just take minutes, hours, days to crush a brand.
Perfect example.
Right? So the messaging you put across, everything that you've done to build up that brand, just be careful because your next move, people aren't as forgiving as you may think they are. And this is just a prime example. A lot of the venture capital community is what caused some of the run on the bank by people telling, hey, go withdraw, go withdraw. And what's happening is these are the same people that were the customers and loved Silicon Valley Bank and helped them grow at the same time, right? Your customers can turn on you on any given moment. So does it mean that you shouldn't trust your customers? No. It means that more so you should really do your best to build great relations with them, be super transparent with them, and let them know everything that's happening. And hopefully you don't run into the same type of scenario that Silicon Valley Bank did. I do think this is one of those rare moments in life. I don't think this is going to be too common. If the government doesn't help others out in the banking space, you're going to see more of this, or I think you'll see at least more of this because it may instill fear in others. But to give you an idea, you can tell people whatever you want with your marketing material. If people don't have the trust and believe in you, it doesn't matter. And you got to earn that trust.
I'll just say, look, the reality is they've been around for 40, 50 years or so. They were the gold standard. And I think I mentioned on a previous podcast talking about this, that when I would go speak at these technology conferences, they would be there. They would be one of the premier sponsors. And everyone I met from SVB has been really kind. They've always been figuring out how to best help people. So I think they had a good business, right, at the end of the day. But I think there's a lot of things that led up to this. I don't want to just attribute it to one thing. It's obviously a lot of variables at play here. We hope it works out for everyone. We know a lot of people here where they have their money stuck right now. We hope it all works out. But that's what we think. Let us know what you think in the comments. Please don't forget to rate, review, subscribe, and also subscribe to us on YouTube. And we will see you tomorrow.